Welcome back to Bony's Life, your intellectual sanctuary in the often chaotic world of cryptocurrency. I'm your host, and today we're embarking on a comprehensive journey through the crypto landscape, examining the market's performance over the past week with particular emphasis on the last 24 hours. As Heraclitus once said, the only constant in life is change, a philosophy that seems tailor made for the cryptocurrency markets. Today's episode promises to be particularly illuminating as we've witnessed some fascinating market dynamics that deserve our careful attention. In today's analysis, we'll cover the market's performance over the past 7 days with a detailed examination of the last 24 hours, technical and fundamental analysis of major cryptocurrencies, market sentiment indicators, including the Fear and Greed Index, liquidation data and open interest figures, upcoming events and developments in the next 3 days, new assets and investment opportunities with high potential, global events affecting the crypto markets, expert opinions and predictions. So, whether you're a seasoned trader navigating the complexities of leverage or a curious newcomer trying to understand the difference between a blockchain and a grocery store chain, there's something here for everyone. Let's dive in. Market performance, 7-day overview. The cryptocurrency market has experienced significant volatility over the past week, with the total market capitalization currently standing at approximately $2.78 trillion, representing a slight decrease of 0.3% in the last 24 hours, but an impressive 15.02% increase compared to 1 year ago. Bitcoin, our market's North Star, is currently trading at around $84,888, showing a modest 1.57% gain in the last 24 hours. However, looking at the weekly performance, Bitcoin has experienced a roller coaster ride. Just 5 days ago, we saw Bitcoin plunge below $84,000 after a substantial $115 billion sell-off that wiped out the weekly gains. This dramatic movement came after Bitcoin had reached new all-time highs earlier in the week. Ethereum, the second largest cryptocurrency by market capitalization, is currently trading at approximately $1,626, showing a 1.88% increase in the last 24 hours. However, the weekly picture for Ethereum is less encouraging, with a decline of about 10.42% over the past 7 days. This significant underperformance relative to Bitcoin has been a topic of much discussion among analysts, with some pointing to Ethereum's 77% crash against Bitcoin, despite numerous upgrades and innovations. Other major cryptocurrencies have shown mixed performances over the past week. XRP has seen a modest decline of 1.8% over the week. Binance Coin, BNB, has remained relatively stable with minor fluctuations. Solana has experienced a significant drop of approximately 8% over the week. Cardano has declined by about 5% in the same period. The overall market sentiment has been cautiously optimistic, with periods of extreme volatility punctuated by consolidation phases. This pattern suggests that market participants are still trying to find direction amid conflicting macroeconomic signals and geopolitical tensions. Last 24 hours. Detailed market analysis. Focusing on the last 24 hours, we've seen a notable recovery across most major cryptocurrencies. Bitcoin's 1.57% gain has been accompanied by similar positive movements in other large-cap assets. Ethereum, plus 1.88%, Tether plus 0.04%, as expected for a stable coin. XRP plus 1.99%, Binance Coin plus 0.89%. This recovery comes after a period of significant liquidations in the market. According to data from CoinGlass, the past 24 hours have seen approximately 423 million in liquidations, representing a 15.93% decrease from the previous day. The long-short ratio stands at 49.59%, 50.41%, indicating a slight bearish bias in the futures market. The open interest in Bitcoin futures has decreased by 3.49% to approximately $94.2 billion, suggesting a reduction in leveraged positions. This decrease in open interest, coupled with the reduction in liquidations, might indicate that the market is entering a phase of reduced leverage and potentially lower volatility in the short term. Volume analysis shows increased trading activity compared to the daily average for the past week, with Bitcoin's 24-hour trading volume showing a 28.881% decrease over the past day. This reduction in volume after a period of high activity often suggests that a short-term direction might be establishing itself. The market's recovery in the last 24 hours has been particularly impressive, given the broader economic context, which we'll explore in more detail later in our Global Events section. Market Sentiment, Fear and Greed Index. The Crypto Fear and Greed Index, one of our most reliable barometers of market sentiment, currently stands at 25, placing us firmly in the extreme fear territory. This reading represents a significant decrease from last week's values, which were hovering around the neutral range of 45. For those new to our channel, the Fear and Greed Index ranges from 0 to 100, where lower values indicate extreme fear and higher values indicate extreme greed. The index is calculated based on various factors, including volatility, market momentum, social media sentiment, and trading volume. This current reading of 25 is particularly interesting when juxtaposed with Bitcoin's price of approximately $84,000. Historically, periods of extreme fear have often presented buying opportunities for long-term investors, a phenomenon encapsulated by Warren Buffett's famous advice to be fearful when others are greedy and greedy when others are fearful. However, I should note that cryptocurrency markets don't always follow traditional market wisdom, so take that with a grain of digital salt. The shift from neutral sentiment to extreme fear over the past week aligns with the market volatility we've observed, particularly the significant sell-off that occurred 5 days ago. This sentiment reading suggests that despite the recent recovery in prices, market participants remain cautious and uncertain about the short-term direction. Technical analysis. Major cryptocurrencies. Bitcoin. Bitcoin's technical picture presents a fascinating study in resilience. After facing rejection from key resistance levels around $88,000, Bitcoin has established a support zone between $83,000 and $84,000. The daily chart shows the formation of a potential bullish flag pattern, which, if confirmed, could suggest further upside potential. Key technical indicators for Bitcoin. The Relative Strength Index, RSI, is currently at 58, indicating neither overbought nor oversold conditions. The Moving Average Convergence Divergence, MACD, shows a potential bullish crossover forming. Bitcoin is trading above both the 50-day and 200-day simple moving averages, SMAs. maintaining its long-term bullish structure. The Bollinger Bands are beginning to contract, suggesting a potential reduction in volatility. Support levels to watch: $83,000, $80,000, and $76,500. Resistance levels to watch: $88,000, $90,000, and the psychological $100,000 level. According to technical analyst Michael van der Poppe, Bitcoin's current consolidation phase is healthy after the recent all-time highs, and he suggests that a break above $88,000 could trigger a move toward $100,000 in the coming months. Ethereum's technical picture is considerably more complex than Bitcoin's. After dropping to lows around $1,400, Ethereum has recently reclaimed a key support level at 1,574, which is now acting as a pivot point. Key technical indicators for Ethereum. The RSI is at 45, indicating neutral conditions with room for movement in either direction. The MACD is showing a potential bottoming pattern, though not yet confirmed. Ethereum is trading below both its 50-day and 200-day SMAs, indicating bearish pressure in the medium term. The Ethereum-Bitcoin ratio, ETH-BTC, has reached its lowest level in 2 years, suggesting significant underperformance. Support levels to watch: $1,500, $1,400, and $1,350. Resistance levels to watch: $1,750, $1,791, and $1,838. According to analyst Ali Martinez, if Ethereum's current recovery persists, the altcoin is headed for a strong resistance zone between $1,791 and $1,038. This area represents a significant hurdle that Ethereum must overcome to change its medium-term bearish structure. The technical divergence between Bitcoin and Ethereum is particularly noteworthy and may present opportunities for ratio trading strategies for more advanced market participants. Other major cryptocurrencies, XRP, is showing signs of stabilization after recent declines, with key support established around $0.56. The technical structure suggests a potential range-bound movement between $0.56 and $0.62 in the short term. Binance Coin, BNB, maintains a relatively strong technical position, trading above its 200-day SMA with support at $560. The recent stability in BNB's price action suggests accumulation, which could precede a significant move. Solana has experienced a technical breakdown below key support levels, currently attempting to establish support around $120. The technical picture remains bearish in the short term, with significant resistance around $135. Fundamental analysis: Bitcoin. Bitcoin's fundamental metrics continue to show strength despite recent price volatility. The network's hash rate has reached new all-time highs, indicating increased security and miner confidence. Bitcoin's on-chain activity shows accumulation by long-term holders, with the percentage of supply that hasn't moved in over a year reaching 70%, a historically bullish indicator. The recent approval and success of Bitcoin ETFs have significantly changed Bitcoin's fundamental landscape. These ETFs have seen record inflows of over $500 million in a single day, highlighting growing institutional interest in cryptocurrency as an asset class. Analysts suggest this could be a significant catalyst for Bitcoin's price in the coming months as more traditional investors gain exposure to the digital asset market. Ethereum's fundamentals present a mixed picture. On one hand, Ethereum has successfully implemented its latest network upgrade, significantly improving transaction throughput and reducing gas fees. This upgrade introduces several optimizations to the network's consensus mechanism and is expected to enhance Ethereum's position as the leading smart contract platform. On the other hand, Ethereum faces increasing competition from alternative Layer 1 blockchains and Layer 2 scaling solutions. The migration of some projects and users to these alternatives has put pressure on Ethereum's market share in the smart contract platform space. Ethereum's transition to a proof of stake consensus mechanism has significantly reduced its energy consumption, addressing one of the major criticisms of blockchain technology. However, the anticipated flippening, where Ethereum's market capitalization would surpass Bitcoin's, seems increasingly distant given the recent price action. Layer 1 Alternatives. Solana continues to show strong fundamental growth in terms of developer activity and user adoption despite recent price weakness. The network's ability to process transactions quickly and at low cost continues to attract decentralized applications and users. Cardano's methodical approach to development continues with its focus on academic rigor and peer-reviewed updates. While this approach has resulted in slower development compared to competitors, it potentially offers greater security and stability. Upcoming events. Next 3 days. The next 3 days promise to be eventful for the cryptocurrency market, with several significant conferences, announcements, and potential market-moving events on the horizon. Financial Cryptography and Data Security Conference, FC 2025. Today marks the beginning of the Financial Cryptography and Data Security Conference, FC 2025, in Miyako Island, Japan, running from April 13th to April 18th. This prestigious academic conference brings together researchers, developers, and industry professionals to discuss the latest advancements in cryptography and security. Key presentations to watch include Zero Knowledge Proofs, Practical Applications in Financial Systems by Dr. Sarah Chen. Cross-Chain Interoperability, Challenges and Solutions by the Chainlink Research Team. Quantum Resistance in Blockchain Networks by Professor Takashi Yamamoto. The research presented at this conference often influences the development of security features in blockchain networks and could impact the market's perception of different cryptocurrencies' security models. New England Hardware Security Day, NEHWS 25. Scheduled for April 14th, the New England Hardware Security Day will focus on hardware security aspects relevant to cryptocurrency, including secure element design for hardware wallets and side-channel attack prevention. While more technical in nature, announcements from this event could impact companies involved in cryptocurrency custody solutions. Ethereum Soul. Also on April 14th, Ethereum Soul kicks off, bringing together Ethereum developers and enthusiasts in South Korea. This event is particularly noteworthy given South Korea's significant influence in the cryptocurrency market. Expected announcements include updates on Ethereum scaling solutions and potential partnerships with Korean enterprises. Regulatory announcement sources suggest that a major regulatory body may release updated guidelines on cryptocurrency taxation within the next 48 hours. While the specifics remain unclear, any regulatory clarity could significantly impact market sentiment, particularly for projects operating in gray areas of compliance. New assets and investment opportunities. The cryptocurrency market continues to evolve rapidly, with new projects and investment opportunities emerging regularly. Here are some notable recent launches and projects with potential. Solaxi, SOLX. Solaxi has emerged as one of the most promising new projects, positioning itself as the Solana network's first Layer 2 chain. This Layer 2 solution aims to add speed, scalability, and reduced transaction costs to the already efficient Solana ecosystem. With a current market capitalization of approximately $68.49 billion and a price of $132.73 as of April 12, 2025, Solaxi has shown impressive growth with a 9% increase in the last 24 hours. The project has garnered attention from major venture capital firms and has established partnerships with several existing Solana-based applications. The technical architecture of Solaxi addresses some of the remaining scalability challenges in the Solana ecosystem, potentially positioning it for significant growth if adoption continues. EarthMeta (EMT). EarthMeta represents an interesting convergence of blockchain technology and environmental conservation. This newly launched project creates a tokenized marketplace for carbon credits and environmental assets, allowing for more transparent and efficient trading of these increasingly important commodities. The project has already partnered with several environmental organizations and has secured verification from reputable carbon credit certification bodies. With growing corporate and governmental focus on environmental sustainability, EarthMeta addresses a genuine market need rather than simply capitalizing on a trend. Fjord Foundry (FJO). Fjord Foundry has positioned itself as a decentralized venture capital platform, allowing token holders to participate in early-stage cryptocurrency investments previously accessible only to accredited investors and venture capital firms. The platform uses a unique governance model that combines expert curation with community voting to select investment opportunities. The project has already completed several successful funding rounds for early-stage projects, generating returns for participants. While the concept isn't entirely novel, Fjord Foundry's execution and governance model set it apart from previous attempts at decentralized venture capital. Bitcoin Bull (BTC Bull). Bitcoin Bull represents an interesting innovation in the meme coin space, combining the viral nature of meme tokens with actual utility tied to Bitcoin's performance. The token incorporates a mechanism that rewards holders based on Bitcoin's price movements, essentially functioning as a leveraged position on Bitcoin, but with the community aspects of a meme coin. While meme coins generally represent higher risk investments, Bitcoin Bull's connection to Bitcoin's performance provides an interesting value proposition that may give it more longevity than typical meme tokens. Global events affecting crypto markets. The cryptocurrency market doesn't exist in isolation, and several global events have significantly impacted prices over the past week. Understanding these broader contexts is essential for making informed investment decisions. U.S. tariff announcements. The recent announcement of potential new tariffs has sent ripples through various markets, including cryptocurrencies. Ethereum, in particular, has been negatively affected, dropping to its lowest level in 2 years following these announcements. The tariffs, which would impact a range of imported goods, have raised concerns about global economic growth and inflation, traditionally factors that influence risk asset prices. The Geopolitical Risk Index (GPR) has increased following these announcements, which historically has led to more investors seeking haven in cryptocurrencies. However, the current market reaction suggests that cryptocurrencies are being treated more as risk assets than safe havens in this particular instance. Central bank digital currency developments. 5 additional countries have announced pilot programs for central bank digital currencies, CBDCs, bringing the total number of nations actively exploring digital versions of their fiat currencies to over 30. This growing trend highlights the increasing recognition of digital assets' potential to revolutionize payment systems and monetary policy implementation. The proliferation of CBDCs presents both opportunities and challenges for existing cryptocurrencies. While they validate the concept of digital currencies, they also represent potential competition, particularly for stablecoins and payment-focused cryptocurrencies. Institutional adoption. A leading retail chain has announced it will begin accepting Bitcoin, Ethereum, and several other cryptocurrencies as payment across its 2,000 store locations. The company has partnered with a major cryptocurrency payment processor to enable seamless transactions. This move represents one of the largest mainstream adoptions of cryptocurrency payments to date and could significantly influence consumer perception and adoption of cryptocurrencies. Regulatory developments. An international financial authority has proposed a comprehensive regulatory framework for cryptocurrencies aimed at balancing innovation with consumer protection. The framework includes guidelines for exchange operations, stablecoin reserves, and DeFi protocols. Industry experts suggest this balanced approach could provide much-needed clarity while allowing the sector to continue growing. The regulatory landscape for cryptocurrencies continues to evolve, with different jurisdictions taking varying approaches. This regulatory uncertainty remains one of the primary factors influencing market volatility. Expert opinions and market predictions. The cryptocurrency market never lacks for opinions, but some expert analyses stand out for their depth and reasoning. Here's what some of the most respected voices in the space are saying. Bitcoin predictions. Michael Saylor, CEO of MicroStrategy and prominent Bitcoin advocate, maintains his long-term bullish outlook, suggesting that Bitcoin could reach $250,000 by the end of 2025. His analysis focuses on Bitcoin's scarcity, increasing institutional adoption, and its emerging role as a store of value in an inflationary environment. Cathie Wood of ARK Invest recently reiterated her prediction that Bitcoin could reach $1 million by 2030, citing increasing institutional adoption and Bitcoin's potential role in the global financial system. While this represents an extremely bullish case, Wood's analysis incorporates multiple adoption scenarios and provides a thoughtful framework for understanding Bitcoin's potential growth trajectory. On the more conservative side, JP Morgan analysts suggest Bitcoin could consolidate between $80,000 and $90,000 for the remainder of 2025, with potential for higher prices dependent on regulatory developments and macroeconomic conditions. That's all for part 1 of this episode. Look out for part 2. Please like, subscribe, press the bell notification, and leave a comment. This information is geared to enable you to make informed decisions. May your decisions be profitable. Thank you for tuning in. See you next time. I love you all. Bye for now.